Hi traders, this is Mike Hamilton from Trade the Easy Way, and just looking at this Nasdaq, and I've been calling this up for ever since we did this pattern here and broke out head and shoulders. There's the neckline, stayed above the neckline, and at the weekend I was talking about how we'd react to this high here, expecting this pullbacks to get bought and to push up and potentially to get back up to this trend line. Options expiry on Friday. We're around the big 14k mark. But anyway, at the moment, any pullbacks to this previous all-time high of 890 is to be bought, and the top of the channel is around there, around to the 14,500 mark. If there's enough momentum to get up there, we are high, we are extended, but it's a strong market. It's not an oversold market, it's a strong market. There's a big difference. Okay, if we look at the Dow, I was buying the lows in the trading room yesterday, and this is why. We saw a sharp drop into the open, and literally 15 minutes after the open, this thing just picked up. And basically what we've done is we've retraced our steps from Friday. So we had this nice little breakout on Friday. So on Tuesday we dipped right back into that support level and then went right back to the top of this channel. So I'm looking for 34,000. So I'm looking for 650 today to see if we can punch up to 34,000 as the week unfolds. I'm not saying that's going to do it today. It is showing weakness. There is some divergence up here. This indicator called an awesome oscillator is a good one at picking up the divergence. So we're making new highs with lower highs in the histogram. So there is potential loss of momentum, and these bars are red. All this indicator is a more graphic variation of the histograms in a MACD. So here you've got the MACD struggling and under the midline. So I admit we're under the long-term trend line here, and this trend line is coming right back from September last year and the March highs. But I think at the moment all dips are to be bought. There's no significant, had we have closed underneath 500 yesterday, then I would have been suggesting you short any minor rallies during the day. But as it is, I'm expecting this to continue higher and to break through this funnel. If we break up and consequently come back into this funnel, then we could, at that stage, we could be due a pullback. But I'm not expecting that at this part in the cycle. Right, gold had a pop yesterday on US inflation. So I think any pullbacks into 1730 potentially to be bought. I expect to see 1760 next stop as we make our way up to 1800. Oil invents today. This is already perking up, and look at the indicators down here. Yeah, we had a decent run up here on these indicators on the MACD, and we that's a very nice explosion higher in the oil, and this is just a three-wave pullback. So if this is a head and shoulders on the oil, as we've seen on the Nasdaq, then we should potentially punch through this 62 and get back to 68 in theory. However, if we knock on that door of 62.5, 63 and fail, then this is coming right back to 55. So these markets are at a crucial level, but there is no reason to short. In terms of data, we've got US retail sales tomorrow, so I think that we're looking for a nice high number in US retail sales, hence the reason why, and that is what the market seems to be pricing in at the moment, hence these dips are getting bought. My stock of the week is POG. So POG has got bought down here at I think it's about 23.50. Started punching higher, dropped back into support, and now we are holding above this 25. So there's still plenty of time to get into this. As we speak, we are only just above the 25 mark. So any dip into 25 or under, I think is still to be bought for a potential move into 30 on POG. So it's a 1-2 wave move, and wave 3, the potential impulse wave, is potentially underway. Alright, if we start closing under 25, then this may not work. But what the chart is showing me at the moment is that this has the potential to get back to 30. So use your risk management tools at all times, protect your account, don't chase the markets, but in theory this area here is potentially viable, and you can see the divergence here. This is a bullish divergence. We were making new lows at the time that we were making higher lows on these indicators. So this awesome indicator is a nice indicator. This is pro real-time software, but you don't, your standard settings on your MACD will pick this up. You just need to know what to look for. All right, we're above the midline, just potentially break through the midline on that one, and looking for this to come back here. Now, if POG does come back to 30, I think this could be through and through. We've had two tests of this trend line since we formed it. I think it could be through and through. I think we could bump into it, potentially pull back, and then eventually come out of it. And who knows, maybe go to 40 or 50 longer term as we get in towards the autumn. All right. I hope that helps. Look out for events we've got coming up at tradeeasyway.com, and look forward to seeing you soon. If you want to join our trading room for day trading, then go on tradeeasyway.com and look at the course page on Scalper School day trading. All right, thanks for listening. Bye for now.